I think in a lot of these places where the supplies had the most impact, I'm not sure it'll ever look like a real curve because the initial surge in supply was so big, and now the drop off in supply is equally big. And so I think it creates some volatility on both sides. And so I'm not sure it's ever going to smooth out as a real curve. I think instead, like once we see vacancy rates normalize, I could be wrong about this, but I think we'll see the market start to rebound pretty quickly. We've seen obviously rent cuts and more rent discounts, concessions to capture some of that demand. But I think it's also the little things as well. I mean, you hear property managers talk about being back to the basics, right? Like things like, making sure your landscaping is pristine. So you'll come look at your property. It looks like a nice place to live. Taking care of your resident maintenance requests. I mean, maintenance is one of the big reasons why people move out. If they're not happy with how you're maintaining their unit or responding to their maintenance requests, how fast you solve those things. Well, I mean, it's already happening in certain markets. I mean, obviously, in places like the San Francisco Bay Area, I mean, that's an area very different from the rest of the country. It was hit really hard, obviously, during COVID and the years after COVID. But these last, 18 months or so, we've seen it really storming back. Now, San Francisco tends to be a very volatile market, so I don't think that's necessarily indicative everywhere. But certainly, we do see that, somewhat similar trends to maybe a more muted degree in lower supplied markets in the Northeast, the Midwest, even places in the mid-Atlantic, like Virginia Beach has been a really strong market. And so, when that happens kind of nationally all over, I think you're going to see it gradually, just depending on the timing of how long it takes to absorb the supply.